Welcome to Finance by CWT. So I titled this video How to Get Rich Off of $200. And obviously I'm talking about the stock market itself. And the reason I make this video is because I see a lot of people talk about when it comes to the actual market that you need to start with a large amount of money or that you need to be investing large amounts of money every single year. So I wanted to make this video to kind of basically say that that's not really true. And to kind of show it, I put the actual numbers and everything in here. But before I get to that, I run an investment blog where I write about, the stocks that I'm buying, market strategies, stuff like that. It's completely free, so join it, link in bio or in the description of this video. Make sure to join that. Best way to support the channel. And now let's get to the numbers. So looking at a 40-year time frame, and the reason I picked 40 years is, I'm basically talking about someone who basically starts investing at, 20 years old and, are looking to retire at around 60. So 40-year time frame. If you get a 10% return, which is the market average, and what basically that is it's not just the market return, but with the dividends that you get from the companies. If you turn in dividend reinvestment and put it back into the market, since the inception of the market has returned 10%. I see a lot of people online when that 10% number gets brought up, they instantly get very almost defensive, and they're like, 10% is crazy. It's more like 8%. But if you look at the actual numbers, it's 10% with dividend reinvestment. So if someone invested $200 a month for a 40-year time frame, and 40 years, they'd have $1.1 million, which is $200 a month. Not that much money at all. If they could somehow get a 15% return, they'd have $4.5 million. And if they could somehow get a 20% return, they'd have $19.2 million. Now, a lot of people are going to point out that, while that is true, most people, or hardly anyone, can actually get like a 15 or 20%. And that's true. Most people can't beat the market. In fact, if you look at like mutual funds, hedge funds, it's something like 80 something percent fail to beat the actual market. Now, with that being said, a big reason they fail to beat the market is because hedge funds and mutual funds have a problem, which is kind of ironic. It's too much money. When you are managing billions of dollars, like let's say there's a hedge fund that manages $10 billion, and a small cap stock trading at $1 billion valuation. You can't well, one, you couldn't put $1 billion into the stock. A lot of the shares are being held. You could only buy a certain amount of the stock, and the amount that you could buy would, like, even if the stock 5x from that point, wouldn't actually help the fund all that much. So because hedge funds and mutual funds are managing so much money, there's the amount of investments they can actually do is limited. So it's a lot harder for a hedge fund or mutual fund to beat the market. Now, that being said, too, it's not easy at all for a regular investor either. In fact, 90% of them will never beat the market. But if somehow you could, that'd be the actual returns. But even with the 10% return, 40-year time frame, $200 a month, if the market continues to do what they actually do over a 40-year time frame, that's $1.1 million. And that's a really good amount of money. So that's kind of how you could actually get rich, or more. The title should be how to actually retire off $200 a month. But that's how you actually do it. And if you like this video, make sure to subscribe to the channel. Thank you so much for watching. Make sure to leave a like. Thank you.